Good morning everybody and welcome to this week's Motor Trade Radio podcast in association with eBay Motors Group. It is Saturday the 15th of August and you're joined by myself, Philip Nothard.
And me, Curtis Hutchinson. So this is episode 371 and we're live on tape from our virtual studios, me in Surrey and you up in West Yorkshire.
Yeah, hot in Rishworth, yes. So it's been a scorcher, hasn't it, in the last week since last week's podcast.
Yes, yeah. I mean, this is kind of unprecedented. I'm actually old enough to remember the summer of '76, and I think the last week has been even hotter.
Do you think? Well, yeah, it could be because there's been some hot weather, definitely in the UK. So a bit of a challenge. I don't think anybody that follows me in the Facebook world. I managed to get at least 1.3 kilometres on my Saturday walk with my rucksack on and everything, and ended up at a pub drinking double Hendrix and tonic for the next 3 hours. So the walk back down of 1.3 kilometres took me slightly longer than the walk up to the pub of 1.3 kilometres, but it was a nice hot afternoon. And
in your rucksack, did you actually have a hip flask as well?
Oh yeah, I was ready to go. Yeah, I was on a 10k walk. Yeah, I was ready and going for a 10k walk, and
it's important to have provisions, isn't it?
It is. I mean, I did look a bit out of place then when we had started ordering tea, and I was in my walking gear. And the landlord said that you have got this wrong. You're supposed to end up at our place when you've been on your walk, not start at our place at the beginning of your walk. And that's obviously where we went severely wrong. But we did have a nice afternoon, yes. But not a very successful walk, should we say. But,
shall we get on to the headlines?
Yes, because we've got some busy headlines. There's a lot still going on in the industry this week.
Yeah, plenty going on. So headlines this week are from AM Car Dealer, Motor Trader and Auto Express. We'll start in a minute with a look at used car trends with stories covering Q2 sales, the latest on dealers stocking older cars, and we'll name the first OEM that we're aware of to launch an approved EV scheme. So other headlines include the latest dealer site acquisition, VW launching an 0% finance scheme for servicing, and we'll finish off this week with a review of the best and the worst performing dealers in Auto Express's driver power survey. So lots to cover.
Yeah, some interesting results in that one as well, isn't there, at the end? Probably some unexpected results.
Yeah, you're right. There are a couple of unexpected ones towards the top and also towards the bottom. So we'll cover that at the end of the show. But starting with AM Online. So the first headline is Cox survey, older cars on 37% of dealer forecourts post-lockdown. So this is based on your dealer sentiment survey. It's your regular sort of vox pop of what dealers are thinking and what the trends are. So maybe if we can just look at it, because it's broken down into 4 sections, isn't it? And I know the first one is stock profile and pricing. So what were the main findings there?
Yeah, so you're right. I mean, in sort of mid lockdown, we went out into the market to continue with the sort of the dealer market sentiment survey, but obviously focusing around the lockdown and the recovery and sort of the outlook from some of the dealers as to what they thought were some of the key areas that they were looking at. And as you say, the stock profiling and pricing was the first one, because there's a lot going on, a lot of conversations at the time around whether the retailers were going to hold firm with their retail prices once the instruction was given that they could open again, and we'll talk about that shortly in terms of some of the used car stats on that have been released this week. But there was a lot happening around what was going to happen around used car values in terms of the trade when the Cap HPIs and others, and we had Darren on at the time, were going to start valuing the vehicles again, what was going to happen with the retail pricing. And so we thought we'd ask the dealers, and really it was reassuring to see that at the time the overwhelming majority of the dealers were taking a calm and, should we say, sensible approach of their pricing strategies, despite obviously pressures in terms of how they felt in terms of what would happen, and pressures on cash flow, and they were all sat on fairly heavy levels of stock at the time of lockdown. But I think the majority felt that they would hold firm. They would watch the market to try and see the way it was going to go, wait to see the type of product that we're going to be entering the market, and how the retail market was going to react to one lockdown and obviously the post-lockdown recovery. So I think it was fairly good to see that the businesses were going to hold firm, and really they did do, and we've seen that throughout sort of June and July now into August.
Yeah, and I guess only last week we reported on the eBay Motor Group's findings for July, because they found stock levels were down in July by 30%. Interest from customers was up something like 158% on that March low point, but also with prices pretty stable, because they were only down 0.6% for the month, across their top 50 makes and marks.
Yeah.
So, and moving on from there, you also looked at auction intentions, didn't you?
We did, because obviously I think us with Cox Automotive and Mannheim, we didn't trade throughout lockdown. We opened up our digital proposition towards the end of lockdown, and it was kind of trying to get a gauge of this digital auctions and how the market was going to embrace that digital proposition around auctions, and interestingly, the half of the dealers they were going to stick with digital auctions as a regular channel for stock. In fact, 52% said that they're already using digital on a regular basis and will remain to do so, and that 20%, so a fifth, actually responded to say that they would actually, in the short term, they will be moving to digital auctions and wait to see what happens with the physical auctions in the long term. So I think we've talked a number of times, haven't we, you and I, on the podcast, around this acceleration of digital, and how dealers have adopted this digital proposition throughout lockdown. And I think auctions is one of those areas that there has been a huge shift towards that adoption of digital purchasing of vehicles through the online auctions. And only speaking from a Mannheim perspective, but some of the sales have been 200 to 300 people online at any one time. And one of the auctioneers, I think one of the quotes is that there were people competing against each other who wouldn't have normally competed against each other in that online space. So you can see where it's happening.
Yeah, and anecdotally, I've been hearing from dealers in some of my conversations that have used online for the first time to source stock, and that they've actually kind of been surprised how easy it is. So we might be seeing a sort of change of behaviour there. And talking about behaviour, you actually looked at what dealers thought of consumer behaviour, and I know we've talked a lot about the sort of pent up demand in the market. So what were dealers saying about that?
Yeah, I mean, there's a lot of unknowns, and I mean, this is asking the dealers of what their expectations were, some of the changes in that consumer behaviour. And as you say, we've been talking about it, and unfortunately I think there's so many changes coming on a regular basis at the minute. I think consumer behaviours are sort of switching a little bit on a regular basis, but the pandemic has without cause many consumer behaviours to change. It has accelerated those that may have already been taking place pre-lockdown and pre-pandemic, but the automotive sector, as we say, has not been exempt from this. There has been changes around consumer behaviours. We do expect that there is a fundamental change in the way consumers choose and use their vehicles in both the short and the medium term. And I don't know what conversations you've had with people. I've certainly been talking to people about, what's their annual mileage going to be? What type of vehicle do they need to now use to do their job? Will they be able to switch from a diesel vehicle doing 20, 30,000 miles a year that they may not believe they're doing in the medium to long term and switch to a hybrid or an EV because they're doing a lot less mileage? So there's a lot of that going on.
Yeah, and it's a difficult one to call, isn't it? Because we're all doing a lot less mileage than we were 12 months ago, or even 5-6 months ago. So, planning on a future purchase based on that is it is a challenge.
It is, yeah. And I think one of the things that we were trying to sort of look at and work with the dealer network on, that things are going to change. Even short to medium term. The short term pre-lockdown and immediately after lockdown, there is this nervousness towards public transport, and therefore there was this demand for vehicles instead of public transport. Then you've got the transport companies this week talking about investment and support in the infrastructure of the public transport, but will that be enough to get people back on to public transport? But what we were trying to get across is that the consumer's ownership, type of vehicles, usage of vehicles, and how they fund vehicles will change. And some of it will be an acceleration of something that was already happening, or it will be as a direct consequence of COVID-19. And I think we were trying to sort of say to the retail dealer network that maybe review and understand your market, review your stock profiling. If you historically, for argument's sake, stocked 70% diesel, 30% petrol, and didn't really get involved with hybrid and EV product, then maybe there was a time to revisit that profile and think about those alternative fuel types.
Yeah, and the final section is business behaviour. So what was the key finding there?
I think inevitably, the health and well-being of both their employees, the colleagues, and the customers was number one. That's inevitable. I think everything we see on a daily basis is about that still. And, some of the decisions that are being made, business decisions in the short to medium term, is on about, the health and well-being of their customers and their colleagues in work. But interestingly, it was cash flow that was second. That was their next greatest concern around the cash flow of their business. And I think, we've talked about it, and this week there's been in particular a lot of conversations because we're very quickly approaching the final stages of the furlough support from the government. We're in these sort of reducing processes now, and sort of end of October is whether it's D-Day as the correct reference or not, but we're very swiftly approaching that, where costs are going to come back into businesses and cash flow is key. And behind that, it was reduced. There was concerns around reduced sales volumes, entering a recession, which I think has been decided now in the last 48 hours by the government.
We're officially in it, aren't we?
Sorry, yes.
Whichever way you look at it, we're in it.
But there was on a positive note, there was a question around thinking around the remainder of the calendar year and asking whether the business plan was going to change as a direct response of COVID-19, and secondly, whether they expected to return to profitability following COVID-19. And 78% did. They were going to change their business plan, as you would expect, as a direct consequence of COVID-19. Interestingly, 10%, just over 10%, said they weren't going to change their business plan due to COVID-19. But on a very positive note, 43% said that they did expect to return to profitability this calendar year. Some of them, 33% said they didn't expect to, but actually 24% didn't know. So you've still got 67% there that either do expect to return to profitability, or those that were still waiting to find out. And I think there's still a lot to come, because I think we've spoke about it on previous podcasts. There's been a lot of pent up demand through June and July, and August is still continuing to be very strong.
Yeah, and when are you doing the next survey, and how can anyone listening take part?
It is imminent, so we are looking at doing a follow up to this because this was done mid lockdown, and it's a case of gauging the temperament of the dealer network now that we're out of lockdown, thinking probably for the remainder of 2020 and into 21. So we are working on that now. So expect to see something in the social media space probably in the forthcoming 2 weeks, I would suspect. So or drop me a note directly, drop me a note and I'll add you to the distribution. You can gladly get involved and then obviously be a recipient of the findings when we finally collate the figures.
Yeah, and staying with used cars, so the next headline is from AM Online, and it's SMMT reveals COVID-19's devastating impact on Q2 used car sales. So this is the data that the SMMT puts together on the quarterly used car transactions, and the results were that the sector actually fell 48.9% in Q2. So that bearing in mind that covers April, May, and June, which 3 months of lockdown, and that's roughly a fall from 2 million units last year to 1 million transactions this year. So what did you think of this one, Phil?
Well, interesting. I mean, we were talking before the show, weren't we? And there was this I don't know, to put a positive spin on this and to look at it from a half glass full perspective is that bearing in mind we were locked down April and May, and June wasn't a full trading month because we didn't have Wales and we didn't have Scotland on, and you and I have spoke about that numerous times on the podcast. But there was still just short of 178,000 transactions that took place in April. So we missed the back end of March, so we lost some transactions there. But actually in April there was still 178,000 done. So 26, just short of 26%, we still did compared to last year in April, and that was full lockdown. And in May we did 330,000, just over 330,000. So that was we lost just over 52%. Or you can look at it, actually we still did nearly 48% of last year's worth of transaction trading in another full month of lockdown. So, I think, we only lost 17.5% in June. And we didn't have Wales in April. We didn't have Wales and Scotland on board in June. And we still only dropped 17.5%. So there is volume going through, there is pent-up demand. Now, obviously, you've got to outweigh that with product availability, etc., as we're moving through Q3 and Q4, but I don't think it's that bad. I mean, we did, 7.9 million last year. I think if we can get close to 7 million used car transactions this year, considering the headwinds that the sector's faced, I think it won't be a bad result. I don't know what your thoughts are on this one.
Yeah, no, I agree, because Q2 followed a 8.3% drop in Q1, but from memory, I think January and February were strong, and then we saw losses in March. I think that's the right way around. Yes. But so year to date, we're down 28.7%. So that's from 4 million units to 2.9 million units. So with still a long way to go, and as you say, dealerships weren't really truly up and running across the UK until the beginning of July, which will feed into the Q3 results. We'll just have to wait and see what happens there.
Yeah, and I mean, let's not kid ourselves. 1 million transactions lost, and this is change of ownership, so we need to put that in context. So this isn't invoice sales, because there's no way of tracking that through the sector, but this is change of ownerships tracked through the DVLA. So that's movement between families, or just selling the car privately or whatever. So there is an element of this, but it's the only way we can track it. But it may be difficult to pull back that million shortfall by the end of the year. We've got some tough times ahead. We could have been worse. I think you and I said before the show that actually April and May was a full lockdown, and there was still 500,000 transactions that took place, or change of ownerships that took place. So that could have been worse. There could have been nothing in April and May. So I think as you say, there's a lot to think about. And you were right. Jan Feb, we were 2.9% ahead of last year in January. We were 4% ahead in February. So Q1 was a very strong start to the year. It did fall in March, but we know why. With the early shutdown, we dropped 30% in March. But I think to be Q1 8.3% down and Q2 28.7% down isn't a bad position to be, considering the headwinds.
Just out of interest, do you keep those stats in your head, Phil?
I have a lot of stats.
Total recall.
Yeah, I've got a lot of stats. Yeah, so I do apologise for that. But yeah, anyone that does know me, I like my stats and my Excels and figures. But yeah, we'll.
Oh yes.
Yes.
So next headline, and staying with used cars, is from Motor Trader, and headline is Hyundai launches approved used car scheme for electric vehicles. Now, we think this is the first approved scheme specifically for EVs. So, as I say, it's been launched by Hyundai. It's called the Hyundai Promise, and it's for cars up to 42 months old. And so it includes things like 18 months warranty, 12 months roadside assistance. But I think more interestingly, it's a strategic move which other OEMs will surely be looking at.
No, you think you're right. I mean, I've worked with many used car approved systems throughout my career, and as you say, I've not seen, and I'm sure somebody can correct us if there is, but I've not seen anything specific around EVs. We know that people like the NFDA are doing their EV system and support for the dealer network, and they're through their approved scheme. But actually, a manufacturer-driven used vehicle scheme that is offering an 18-month warranty with all the other points, I think that's a first, and I think it demonstrates Hyundai's strategy in EV, their growth in EV, and their support to the dealer network around that product.
Yeah, and speaking of which, also this week, Hyundai announced that Ioniq, which is their EV, it's a plug-in, it's a hybrid, and I think it's a plug-in hybrid as well. But Ioniq will be spun off into a separate EV brand from next year. So they did a big promotion in London last week, whereby they took over the London Eye, and that became a giant queue to highlight what they're doing. So this is really on the back of, it's now 4 years since the original Ioniq was brought to the market, and of course that will start to come out onto the used car market really, in sizable numbers from now. And what they're saying, what Hyundai is saying, is that Ioniq as a separate brand will start in earnest from next year, because they've got 3 new models that they'll be launching, and the first one comes to market early next year. So some interesting plans there from Hyundai.
Definitely. And then again, remaining with used cars, and this is an interesting story, this, because we were talking before the show about the sort of spin-offs from this, really, but this is with Car Dealer magazine, and this is talking about car owners' urge to beat the MOT rush, as new research shows that most motorists are delaying their cars' MOTs, and this is since the date was changed, and that everybody everyone needs to get their car MOT now, and the Ombudsman is obviously reporting on that we're going to get this rush of consumers to get their vehicles MOT'd, albeit they could have had them MOT'd at any point now, but obviously they've had the opportunity of deferment on the from the DVLA on this one. But I don't know what your thoughts are on this, because I think there's other things that we talked about where people are talking about they're advising sort of MOT centres and dealers who offer MOTs to start thinking about extended hours to support this.
Yeah, you're right. I mean, it's an interesting piece of research, because they've quizzed over 760 owners about what they're doing with their expiring MOTs, and 56% have opted to actually prolong taking them back to a garage to be tested, while 36% said they would be booking before or on the extended due date, but only 20% will be getting their MOTs before the extended deadline. So we're seeing here that most people are choosing to wait, but of course what this is going to cause is a huge surge in demand for MOTs at what is usually a busy time of the year for MOT test stations, because we've got September coming up, so there's going to be an influx of 3-year-old cars coming in for their first MOTs. So there's a lot of talk in the industry, and in fact, I was chatting with Andy Sava, the garage inspector, only this week, and he's a vocal advocate of extending opening hours, be it for independents who he represents, or indeed franchise dealers. So there will be a huge surge of vehicles to get through. So this needs to be managed.
I know, and it's every time with these kind of things, not just COVID-19 related, but any sort of changes in legislation. We've had it with tax changes, road from license changes, etc. in the past, that you just wonder what people making these decisions know about the automotive sector in terms of plate change months and things like this, don't you? Because inevitably it's never the best timing for these kind of things, is it? They introduce things at the worst time of the year, when either you miss the opportunity of one of the biggest months of the year, either March or September, or you introduce something that actually introduces additional burden on top of already pressure that are going to be entering the sector. And as you rightly say, there's whatever volumes of new cars were registered 3 years ago, which I can probably get the stats for that if you like.
Yeah.
But,
you don't know them off the top of your head.
336,000, but no, it's 238,000, should I say.
That is scary.
But you've got these people coming back for the first MOT 3 years on from when it was first registered, and you just think, and then you've got the deferment of the last few months as well. You just so you do question it, but anyway, we'll get into a whole new world there. But we'll end up talking about the DVLA being on furlough and delaying all the paperwork within the dealer network, which the IMDA have been challenging of late as well. With
they've been quite vocal, haven't they?
Yeah. There's delays on everything, so there's a lot going on at the minute. But we will move on.
So, in the meantime, you're listening to the Motor Trade Radio podcast, brought to you in association with eBay Motors Group, the only weekly podcast serving the car retailing sector, and available by subscribing on Apple Podcasts, Google Podcasts, Spotify, Deezer, and SoundCloud. And I've also discovered we're available on something called the Radio Public app, which is available. Oh, yeah. It's available on the App Store and Google Play. So, Radio Public app, go there.
There you go. We'll I'd like to know who listens to us on Deezer as well. But
let us know.
We are on Deezer, and we have got listeners, but we are on there. So we have actually got on AM Online, we've got an acquisition. And this is Arden to acquire Inchcape BMW Mini Tunbridge Wells car dealerships. So that's a fairly sizable acquisition there down at Tunbridge Wells, isn't it?
It is, yes. It is a particularly interesting one. So it's a multi-brand operation in Tunbridge Wells, and this will actually double Arden's representation with BMW and Mini. Arden are based in Maidstone, and it's adding £77.6 million worth of turnover to their business, and it's a good strategic fit for them. Now, within this story, Inchcape UK Chief Exec James Brearley tells AM the disposal is part of its continued strategic withdrawal from South East and Kent, and we know that Inchcape have been restructuring operations in the UK, and they have made a number of disposals, including there were 5 VW sites sold to Group 1 back in July, and there was also West London and Twickenham VW sites sold to Citygate in January. So it's that's the thinking behind the disposal as Inchcape continued to regroup.
Yeah, and as you say, I mean, I think AM asked whether the Arden acquisition would bring an end to the Inchcape's recent run of disposals, but they basically said that the right offer came along, and we still operate businesses down in the southeast, and we're quite happy to continue operating those businesses. So I think it's one of these that they are going through this restructuring, but I suppose from their perspective, if the right offer and opportunity then presents itself, then they may take advantage of that and decide to sell or acquire. But it'd be good to get James on the podcast, because he has been appearing in a number of places recently. So if you do listen, James, then I know I'll drop you a note anyway, but if you'd like to come on the podcast, then you are offer to join us.
Yeah, absolutely right. Next headline is from AM Online, and it's VW introduces 0% APR finance on after-sales and accessories. And similar to the Hyundai story earlier, we aren't aware of any other OEMs that are doing this. So if you do know of any, let us know. But so Volkswagen UK has introduced a 0% APR finance payment option on after-sales work and accessories, and that's across the majority of its network, and it's covering the cost of servicing, MOTs, tyres, and general maintenance and repairs. And interesting that there's basically 2 options to help spread the cost. The first is to pay nothing on the day and spread the cost over 3 monthly instalments, or the second option is a 25% initial down payment up front, which can then be spread across 6 monthly instalments. So interesting move here, and very, very consumer friendly.
Yeah, and I mean there is a demand for this. I mean, there's within the dealer world, there is solutions where consumers can fund their servicing.
Yes.
And obviously sometimes the accessories go on to the purchase price of the vehicle, but actually, unless, I'm not sure of any manufacturer-driven incentive purely focused at the after-sales market, which is what this is, allows that to do. And I mean, anything from £60 up to a maximum of £5,000, that's a reasonable scope of available fund on 0% that's giving consumers, isn't it, at this time where it would be much needed.
Yeah, I mean, it'd be interesting to know if this is a white label and it's being provided by a third party, but it doesn't say in the story. But there certainly are, as you say, there are third party solutions out there offering this sort of services. But as a sort of point of sale item within a VW showroom, this is very powerful.
Definitely. And I say, it's they talk about everything, a range of roof bars, bike carriers, tow bars, etc., just trying to make life easier for the consumer in that initial outlay for a time where it's much needed to either get that car serviced or get their accessories for their their holiday in the UK. As we're moving into. So we're moving into an and finally, and this is another one for you, Curtis, with a top and a bottom 10. But as we said at the outset on this one, some very interesting findings. And again, we've not spoke about this survey, have we, for some time? And this is the Auto Express Best Car Dealers survey through the Drive Power survey that they operate in, and this is looking at the good and the bad with franchise dealers from the 25 manufacturers.
Yeah, now the research, we don't actually know how many people they spoke to. That's not mentioned in the story, but this is their big annual survey, and it does make for interesting reading, and it really is based on the after sales experience of customers, and just looking at what the biggest complaints were. So the biggest complaint overall was the dealer not identifying and fixing faults. So that was cited by 20% of the respondents. And also interesting, the reason they chose the dealer for the work, 23.7% naturally bought their car from them. So that's showing the sort of the potential loyalty there, amongst customers and dealers. If you're selling the car, you should be able to win the after sales work. So 23.7%. I would have expected that to be a lot higher. So interesting finding there.
No, particularly it says what type of dealer do you use for servicing, and 87.6% use franchise dealer. So you can see the sort of the survey response people that they cited, aren't they? So you would expect, like you say, more than 23% to return to that supplying vehicle dealer.
Yeah, I mean, the only thing I can think of is we are in the world of distance buying, aren't we? I mean, I did it myself. I live in Surrey, and I bought a new car from Rochester. So, because I was prepared to go there and buy it, I'm not going back there for the servicing work because I'll use a local dealership.
They might not let you know.
Well, no, definitely not. So let me tell you the top 10. So the top 10 performing brands in reverse order. So number 10, Vauxhall. Number 9, Jaguar. Number 8, Citroen. Number 7, Kia. Number 6, MG, which I think is their debut in the top 10. Number 5, Peugeot. Number 4, Porsche. Number 3, Toyota. Number 2 is Honda, and number 1 was Lexus, who scored a whopping great 93.4% in terms of customer satisfaction.
Yeah, I mean, you kind of do expect some of those brands to be in that top 10 there around the servicing and things like that. But it's interesting that we haven't got a German brand in that top 5, have we? There's Porsche, isn't there? I think Porsche is number 4.
Yes,
for a say.
Yeah.
But fantastic.
But no, you're right. None of the mainstream German brands,
No.
although one does appear in the Worst Performers.
Yes, yeah, which you've got.
I have, yes. Let me give you the worst performers. So worst performer overall was Land Rover, scoring just 72.8%, and they were followed by Seat, DS, which is obviously a still fairly new network there, Renault, and Mercedes.
And I mean, in fairness to them, I mean, in terms of the score differential, it's not huge, is it? I mean, Mercedes there at 82.48% against Vauxhall that were in 10th position at 86.91. So the percentages aren't huge in between the top 10 and the bottom ones there. But it's interesting where you see this, isn't it, in terms of that communication, repeat business, looking after the customer, etc. on this survey. But again, we're not quite sure of the numbers, are we, in terms of the numbers that were surveyed?
No, we're not, and unfortunately they don't show the middle players either, so we don't know how the middle section panned out either. But definitely worth heading over to Auto Express to have a look at that, because there's actually comments from some of the respondents on the service that they did get from their dealerships.
So, busy week, lots going on. I mean, there's a lot of holidays at the minute. There's a lot of people on holiday. The weather has obviously certainly had an effect on people's activity at the minute. But as they say, with the used car figures coming out there, and again we're in now this midpoint of recovery. It'll be interesting to see what happens in the month of August and how that new car plate is building up for September. I think Dale summed it up quite interestingly, didn't he, in terms of waiting for that wave to come, and that we need to start building for it and getting ready for it, because there will certainly be a lot of reliance on the September performance. not just on new cars, but actually the generation of used cars as well for the dealer network. So one that I know many will be watching very closely.
Yes, you're right. He used a surfing analogy from his teenage years, wasn't he? When he used to be waiting in the surf, and he did make the valid point that there's two big waves each year for the dealer sector, and we're almost upon the next one.
Good. So I think that's it for this week, isn't it? I think we've had a busy week there, and be interesting to see what we have in the headlines next week. So there's hopefully we have got an interview lined up for next week. We've got a few more of the COVID-19 midweek interviews now diarised for the next coming weeks. So please do stay tuned for that, and we've got some interesting guests coming on to interview on the market.
Yes, so that's all for this week. You've been listening to the Motor Trade Radio podcast, brought to you in association with eBay Motors Group. Join Philip and I again next weekend for our regular review of the headlines. Until then, it's goodbye from me.
And it's goodbye from him.